CPI print, because tomorrow we're getting PPI, and it's important to discuss this and go through this. Greg McBride is with us, Senior Vice President, Chief Financial Analyst, Bankrate.com, and Dryden Pence, Chief Investment Officer, Pence Capital Management. Thank you both for being with us. Greg, I'll start with you. As you take a look at the CPI, and we're waiting on the PPI for tomorrow, which is expected to pull back a little bit, your thoughts on inflation overall?
Well, it's broadening out, Nicole. I mean, over the summer, what we saw was an inflation print that was being driven by things like used car prices and lodging away from home, airfares, apparel. Well, now those items are starting to pull back. What's driving inflation now? Food and shelter, absolute necessities. Together, they accounted for more than half of the increase that we saw in this month's CPI. And those shelter prices in particular, I think what we're seeing here is just really the tip of the iceberg. I mean, already anecdotally, you're hearing about tenants that get sticker shock in different parts of the country when their lease renewal comes up, or if they're looking for a new place. So I think that's one we're really going to have to keep our eye on in the months ahead.
Yeah, I mean, we're seeing inflation across the board. I mean, you talk about the pump, the flights, the rental cars. How about food? Dryden, your thoughts? I'm eager to hear what you have to say about this.
Sure. I think we're seeing the realization that the supply chain disruptions are actually longer than people expected, and inflation may be more real than people expected before. It's not purely transitory. And I think the one thing that we've got to really pay attention to is fuel cost. When you increase the price of a gallon of gas to north of $4 in a lot of parts of the country, you're going to see major changes in behavior, because that's really cutting into the consumer's ability to spend. So as we see those things, it's going to show up in the real economy. So we think that it's a little more real than transitory at this point. It's a question of both, and we think that there's some real inflation in this market, and it's going to take us probably, most people expecting 6 months to a year for these supply chain disruptions to work their way out, and this is going to be with us for a little bit longer than everybody thinks.
Yeah, and that's what we're hearing, right? I mean, it's not over yet. I mean, at least till the end of the year, we're going to see some supply chain disruptions. Greg, I was going through, and I saw an article about debt held by baby boomers and Gen Xers and Gen Z and millennials. And at this point now, where do we stand when we look at what the consumer behavior is? Because you get this feeling that household wealth has been higher and people are spending, especially because of government stimulus. But at the same time, nobody has jobs. I mean, where do we really stand? Are people feeling better than they really are?
It is still very much a K-shaped economic recovery. So, much like the letter K, you've got one leg up where things are just getting better and better. Speaking to that higher level of household wealth, solid cash flow, seeing earnings, income rise. But on the other hand, there is that down leg of the letter K, the households that are still struggling mightily. We had found in a recent poll, 90% of households say that they've noticed higher inflation. And among those that had, about 2/3 said it's having a negative impact on their personal finances. Kind of speaks to the point Dryden made a moment ago about the money that's going into the gas tank. It's not going someplace else. And for all the talk about higher wages, current pace of price increases is outpacing the increase in wages for a lot of households. So, their buying power is getting squeezed at a time when, we're still in economic recovery mode.
Right. And Dryden, as the Chief Investment Officer, what's your investment advice these days? Are you telling people to put money to work, move to cash, take some profits, or buy some dips in certain areas? And if so, where should they put their money to work?
Well, we're always a big favor of buying on dips, because we do think that they're going to have some volatility and things are going to level off here. But I think areas or sectors to pay attention to are companies that are involved in like financial services, where they're asset managers. Those kind of companies that make a lot of money off asset management are going to see continued revenue increases. We want to kind of stay away from industrials that have very high labor cost inputs and very high commodity cost inputs. But we also want to look at some technology companies that are in the ability to be in the streaming space. They don't have as many supply constraints. Also, they have the ability where software, where it's more of an electronic digital environment as opposed to a physical environment, because these disruptions are going to continue for a while. And so companies that also manage their inventory very well are ones on the retail space. People are going to be buying stuff during the holiday season, and the guys who have inventory and have been able to manage through this, those are the ones that are going to have something to sell, because a lot of people won't.
Yeah. Yeah, and I was saying earlier, I saw Nike with a buy from Goldman Sachs. I saw Dick's Sporting Goods as a top pick over at Bank of America. Friday we'll get retail sales, so that'll be interesting to see what kind of consumer behavior we're seeing. Greg, you know, you mentioned the jobs picture and the wages in particular, and Larry Fink of BlackRock today said one area of inflation that we're seeing with this wage growth may never come back, and that is because of how our nation has changed, and we're in a gig economy, and that these workers are not like the workers of our parents who had pensions and traditional benefits, that we've changed as a nation, and maybe those higher wages are really here to stay.
Well, let's just hope people save some of it, because like you said, with the pensions going away, the onus is increasingly on us as individuals, as it has been for the past several decades, to do our own saving for things like retirement. So with wages on the rise, if your buying power is not being squeezed, there's an opportunity to maybe put a little bit more into that retirement account and save for the future.
Yeah, and what's your final piece of advice? I think household savings is always a good one, right? You spend some, you donate some, but you should always save. Good advice right there. Your final piece of advice, Dryden?
I think the thing is to recognize that we have to be patient through all these supply chain disruptions and not to panic over big moves or whatever the Fed does or anything else. What we need to do is recognize that there is a real economy. It's going to take a while for everything to level itself out, but it probably will. So the big thing to do is not panic over the volatility that we're going to see, but be wise about where you deploy capital, not get too far over your skis, and try to look at things that fundamentally are a little less disrupted from this next supply chain mess that we're going to see for the next this next wave, if you will.
Yeah, and the panic, I think you're right. And Greg, a quick thought. I mean, just people worry about the fact that we're not producing the same amount of energy. Energy's on the rise. China, what will China do? The supply chain issues and anything else. Cybersecurity. It's not the end of the USA, folks, right, Greg? Quick thought.
No, far from it. I mean, with the resiliency of the consumer surprises time and time again.
Human beings.
Greg McBride. Yeah, go ahead.
Human beings are the most adaptable species on the planet. That's why we're the top of the food chain. So all of these disruptions.
That's right. All right. Dryden Pence, Pence Capital Management. Greg McBride, Chief Financial Analyst over at Bankrate.com. And of course, William Shatner went to space today. So we'll chalk it up as a good day. Thank you, friends, for joining me here on the Watch List every single weekday at 2 p.m. I'll see you tomorrow.